I'm sure. All right, guys, we'll kick this off. We're going to do a live client kitchen table appointment tonight demonstration. We're not going to go into obviously any personal information on the recording. This is really for showing everyone that a client appointment is really just an extension of an interview, is really what it comes down to. Okay. And I tell you that to give you the confidence of the more interviews that you do, the more comfortable you will be sitting in front of a client because you're going to spend the first 12 to 20 minutes just breaking the ice with the client, explaining the company, and it's going to feel a lot like an interview, right? And all of those like initial jitters of like, oh my God, I'm sitting with a client, they're going to like calm down. You're right back in your element. And then the next thing you know, you're asking questions in a little bit different way and you're drawing an A diagram, maybe a mobile F&A, taking the app. Okay. Does everyone know what I mean by mobile F&A, A diagram? Those are two big ones. And please put it in the Zoom chat because I kind of need to know like baseline, like where I'm going with this. Okay, Amanda said no. Casey said yes. I need a little bit more feedback, guys. There's like 20 of us on the chat or like in the meeting. So even if your camera's off, I kind of need you engaged in the. Okay, so it's about 50-50.
No.
Okay, so about 50-50 between mobile F&A and A diagram. So we will get there a little faster. Honestly, we'll probably just skip right to that. We're gonna like, as I swear to God, guys, the beginning of a client presentation is the exact same as an interview. Okay. The setup is a little bit different. And for me, that's usually just a quick conversation. Hey, Casey, right? Did Angela tell you sort of what she's been doing? Or did she just say, jump on with this weirdo on a Zoom call for 20 minutes because I need some training? Like, where did she kind of land you?
Yep, that's basically what she said. Told me she needed some help with some training and said if I can use it, great. So I'm here.
Okay, perfect. Right. And I mean, how do you know Angela?
We go way back from work. So just kind of know each other from work and kids and everything like that. So
Okay, perfect. Real, and I mean, she's not kidding, right? That's really the goal for the meeting tonight is to show you more about what she's doing. And 1,000%, if you can use it, we'll get into that tonight for you. Super simple. And if you are all set and you can't use anything that we do, well, that would be absolutely amazing. But I'm gonna bet that you probably know some people that can use what we do. Is that fair?
yeah, absolutely.
Okay, perfect. So really the big goal for tonight is to give you a way better understanding of what Angela's doing so that down the road, when you actually run into people or you're having a conversation and somebody needs some help with financial services, life insurance, maybe they want to save some money on their home and auto, maybe they need a will, right? You will
Yeah.
know for sure that Angela is the place to send them back to. Does that make
Right.
sense?
Yes, absolutely.
Perfect. Because listen, I really want you to kind of think of Angela, like in the back of your mind, as like your Amazon of finance, right? Like if you need something, anything, you should call Angela.
Okay.
Because Casey, I mean, let's be honest, you shop at Amazon. Am I right?
Oh, every day. Yep.
Okay, perfect. Why?
It's so convenient. It's here when I need it. It's right there on my phone. Super easy to just go and shop and uh, figure out, cheapest prices usually, all of it.
Awesome. So what I heard was great service. Prices are pretty good. It's convenient. And if you need it, you can kind of access it right there, right?
Absolutely.
You literally just described everything about our company.
I love that.
Pretty cool. Well, hey, I know we just talked about the company. I want to talk and transition really quick and ask you if anyone's ever sort of helped you guys with understanding like retirement planning, financial services, life insurance, any of that. Like right now, like outside of work, who's handling all that for you guys?
For the most part, since I was 19, I have had a State Farm policy, and State Farm has always carried all of my kids' life insurances, and then my husband just has always had something through work. And then we've always had like additional things through work. And then besides retirement, I've never set up anything for retirement.
Okay.
And just my husband's retirement stuff through work.
So listen, I love that you guys already have something in terms of life insurance between group coverage at work, you have something private. If I could show you something that was maybe a better value, gave you guys more coverage, maybe saved you some money, is that something you'd be open to taking a look at?
Absolutely. I love saving money.
I
Yeah.
mean, God bless. Who doesn't want to save money on stuff they're already spending money on, Casey?
Yep. Yep. Exactly.
Perfect. Okay, pause. Listen, I want you guys to start keeping track of how many times Casey says yes to me. I want you to keep track of how many times I say her name. I want you to keep track also of how many times I say open to and just generally. Now, I don't know for sure how many it's going to be, but I think I've said her name probably 5 to 10 times already, and she said yes to me at least 10 to 20. And we're 5 minutes into the conversation, right? That is critical because all of these yeses, guys, and all of this agreement is adding up to the big yes later.
And
Fair?
I can just make a comment too.
Yeah.
I'm being very transparent, guys. Like I know, like even though I'm doing this mock and I'm, talking to Noah, this was me genuinely before Primerica. So I'm telling you very honestly where I was at, what my services were previously. So just so you know, I'm not just winging it. This is what my life was beforehand.
True story, because I was there at the beginning of all of that. So next couple of things I want you guys to listen for is every time I ask her a question, it will either be a yes, yes response or only a yes. And if I ask her a question and she says no, it's because I wanted a no answer, right? It's very deliberate and it's very precise. And it just sounds like a conversation. If I didn't tell you, you wouldn't even hear it. But I want you to start listening for it. Okay. Think back to when I said outside of work, who handles X, right? So, and she said, nobody, me, 19, just me. Right. And so like kind of back into the role play now. It's like, so Casey, like you've been handling everything yourself since you were 19. Do you or your husband have any like formal education in money and finance? Look at my head, guys.
Nope, nothing formal whatsoever.
Okay,
Good old Dave Ramsey, envelope systems, and that was it. So,
perfect. So self-taught, and you already know Dave Ramsey, so that's perfect because that's very, very similar to what we teach clients. But can I ask you another question?
yes.
Awesome. If you either had a formal education yourself in money and finance, one, or you had someone that you knew and trusted, like in the industry, to help you with those things, is that something that you think you would be doing better now versus not having any of it?
Oh, absolutely.
Right. I mean, more education in money and finance can't hurt, right?
Right. No, not at all.
Yeah. I mean, that's a no-brainer.
Yep,
And
absolutely.
even if you didn't want the education, I mean, Angela's going to be doing this like as a professional. Like you would trust Angela to guide you in the right direction, right?
Oh my goodness, yes, absolutely.
Perfect. Right. That's exactly what this is. Because even if you need something down the road that Angela's not licensed for, somebody in the brokerage is, right? Whether that's life insurance, mortgage loan origination, investments, you name it, we can help you with all of it. Auto, home, if you have a small business, we'll take care of all of that, right? We'll make sure you're taken care of.
Awesome.
One thing I want to ask, like talk about really quick though, is since I mean you're pretty familiar with insurances and finance and all that, but on the investment side, who has ever helped you guys with retirement planning outside of like just a regular old 401k, anything like that?
No one.
Nobody. Do you?
We've always known that we wanted to have an IRA, a Roth IRA set up,
Mhm.
but we've never set one up previously just because it was sort of one of those things where, everybody does it, but who do you really go to actually have it done?
For sure. So, Casey, one thing I'd like to kind of do for you really quick is something that we call a mobile financial needs analysis. It's it's super fast. I can probably get it done for you in about, 5 to 10 minutes. And the thing that I love about it the most is it will tell us what we call your financial independence number, right? Because Casey, if I ask you to tell me, what's the first thing that comes to your mind when I say retirement? Is it an age or is it a dollar figure? And be honest, right? It's not a trick question.
Definitely, age for sure, how old we have to be.
Yep.
When you hear my parents, talk about, oh, we're gonna be 55, we can retire at 55. So kind of what you always think about is how old can we be when we retire?
Yeah, no, perfect. So I'll tell you mine, right? Because that age is the most common. Mine is a number, but it's a number, Casey, with a dollar sign in front of it. Mine happens to be 6.4. And
Okay.
here's why. Casey, if you handed me $6.4 million right now, I would invest it. I'd live off of roughly 4.5% of the interest that it would pay me annually. And I'd never work again unless I felt like it.
Wow. I love
So
that.
to me, that's retirement, right? To me, retirement is not 67 and hoping Social Security is going to be there. And that's what we teach clients is how to be financially independent. Okay. So I'm gonna set this up really quick and we'll get this going. I really want to walk you through this because it's super cool. We'll leave that off there. So guys, this is Primerica Online. I'm gonna kind of jump in and out of like character, right? So this is Primerica Online. This is the app version. So here's POL. If you click the little guy right here, this is Primerica app, it'll bring you over here. This is the only place that you can get to the mobile FNA. So click the three lines and scroll down under tools, mobile FNA. Okay. So I don't know if Casey's actually in here, but Casey, you're going to be Casey, just M.
I am. I'm right there.
That way there's not actual
Yeah,
information already in there.
you're good.
Okay, so Casey, this is what we call the theory of decreasing responsibility. And I'm going to just explain this really quick and then we'll jump into this, okay?
Mhm.
So, and I know I'm not supposed to ask a lady how old she is, but Casey, how old are you?
You want to know how I say it? How young are
Mhm.
you?
How young are
Um,
you? Sure.
yes, I am 31.
Okay, so you're 31. Casey, you remember back in school when we did math on a graph, right? Like X and Y axis?
Yes,
Okay,
absolutely.
so y-axis in this case is your money, right? So down here is zero, up here is pretty good.
Yep,
Green line is your money, right? Because right now there's not a whole lot for most
yep.
people that are really young. X-axis is our age, right? So if this were like 25 to 75, that's adulthood for most people. So right now, Casey, you're like right here-ish. And what we say right here for younger clients is your insurance needs are really high because your assets and your liabilities are out of whack,
Right.
right? In this case, right, your liabilities far outweigh your assets.
Absolutely.
And what happens is like right now, early in life, if you died too soon, what is there to replace an income? What is there to pay off a mortgage? What is there to pay for education for kids? What's there to create an estate and cover all the debts? Not much, right?
Yep, just the small policies from work and life and State Farm. That's
Yeah,
it.
so that's why we need life insurance, Casey. Now, let's fast forward though. You figure you get to 65, 70, close to that end of those golden years. And now that entire model flips, right? Because now we've been investing for 35, 40 years. Your assets at this point are way up here. Your liabilities are way down here. Because Casey, I'm going to go on a limb and say 30 years from now, your kids are going to be out of your house. Am I right?
Fingers crossed.
Oof.
Yeah, absolutely. Yes.
I will pray for you, but I'm going to go on a limb and say they will be out of your house.
Yep.
And by then, you and your husband will probably no longer be working. So no one's really relying on your income anymore. So, Casey, if all of those things are true, do you really need life insurance anymore?
Hopefully not.
Hopefully not, right? And that's why we teach clients to be financially independent. Here's another kind of trick question, Casey. How many companies that offer life insurance as a product teach their clients how to get out of the need for life insurance?
None that I know of.
Well, you met one because that's literally what we do. Casey, I don't want you paying for life insurance forever. I want you paying for life insurance when you need it, right? And right now is when you need it. Because how many kids do you have?
4.
Four. Oh, wow. How old are they?
I have a 2, a 3-year-old, and a 9-year-old and an 11-year-old.
Oh, my goodness.
Yep.
All right. So that's a lot.
Yes.
Yeah, that's okay though. So
Yep.
let me just get this in here really quick. The only information I need, Casey, is your guys' birthdays.
1/4/93.
And what about Kyle?
2/8/94.
Okay. So this is just going to base it off of the oldest client, right? In terms of like the software and the system defaults to age, but we need time in terms of like planning for calculations. Okay. Now, if you tell me you want to retire at 40, cool, right? We just change the number and it tells us you got 9 years to come up with however much money you need. So that's where the model changes. The system defaults to 67 for retirement and Social Security. Okay.
Okay.
Casey, roughly how much income are you bringing into the house right now? Net, right? So like after taxes is what I really care about.
Let's just say probably about 4,000 for me
Mhm.
and about 3 for Kyle.
Okay. So Casey, what we teach our clients is that in retirement, you're going to need somewhere in the neighborhood of 80% of your current income coming in and paying yourself like outside of Social Security. We're not counting on any of that. We're making sure that you can take care of yourself. And that's without drastically changing your lifestyle. Okay.
Yep.
That means in order to offset all of that money, we have to have that money saved and then have a plan to start withdrawing on it at a certain point. And now the only other question I have here is like, for either of your guys' current jobs, when you retire, will you have any sort of pension?
Yes, Kyle's does.
Okay. Do you know roughly kind of what that would equate to? Like 1,000 a month, 1,500, like,
I'm looking over.
yeah.
3,300 a month.
Oh, so more than he's like what he's actually making?
Yeah, I don't know how much he actually makes a month.
Okay, so we'll just say it'll be half, right? So, and guys, this is important because that's a legitimate consideration. If someone has a guaranteed income that's coming in from a pension, right? Then you don't have to account for it here. Just as a just as a like thought process, because when you click forward, it's going to take inflation into account. So, Casey, I'm guessing if you're like most people, you have really felt inflation over the last 2 to 3 years, right?
Yeah, absolutely.
Do you remember how much inflation like has been talked about on the news, like what it was average last year?
Nonstop. No, like, I don't know. I know, you watch the videos of people going, oh, I remember grocery prices. I was just
Sure.
paying, half or, even a third of the price for, 2, 3 years ago, than what we're paying now.
So on average, over the last year and a half, inflation has been anywhere between 7 and 9%, way higher depending on how you actually calculate it. The model uses just a steady 3% inflation every year. Okay.
Okay.
Because that's really what growth in the economy should look like anyway. Two to
Okay.
3% GDP growth. So like how much the country is producing. And so like that's real inflation. So like today's $5,600, 36 years from now, when you guys plan to retire, that 16,000 it's going to take almost 40 years from now is going to buy you what today's $5,600 buys. So what we say is that inflation over time is actually decreasing your purchasing power is another way to say that, right? Your dollar goes not as far
Right.
40 years from now, right?
Right.
So in reality, right, your financial independence number is about 3.3.
Yep.
If 36 years from now, you're truly going to pay yourself that roughly 16,000 a month, that will buy you roughly the same thing as 5,600 today. Okay.
Okay.
And guys, so you understand the model, this is exactly what we did up front. The rate of return before retirement is calculated at a steady 8%. During retirement, so at 67 for the remainder of life expectancy, the model converts every asset to 4%. That's saying we're going to basically like shift that entire retirement account into stable mutual funds that are primarily, money market mutual funds, bonds, things that do not go up and down with the market. Because once somebody's living off of that amount of money, we can't accept a lot of volatility. Okay. Just so you understand how the model is built. Now, if somebody said, well, I really want to retire at 60, great, right? Let's retire at 60. The number changes a little bit, but what changes even more drastically is how much you have to save every month to get there. Okay. So Casey, right now, just give me a ballpark number. What do you guys have between 401ks, retirement, everything? You just make
I
up a
don't,
number.
I don't even know. I literally don't even know a fake number that actually sounds good for you.
That's fine. So 50 grand is pretty average for your age. On average right now, if Kyle's putting in something and his company's putting in something for a match, you guys are probably putting away about 400 a month, right?
Yep.
Somewhere in that range. So you guys are doing okay. And here's what's awesome is like right now, just with those numbers, you guys are projected to have about 1 million in your retirement savings. But Casey, if we really want to be financially independent and not work, we need a lot more than that.
Right.
So right now you're saving roughly 400. If you truly want to retire at 60, like we said, we need to save about 2,200 a month. So maybe we go back to the original plan of 67 just to kind of see, because look what happens. The number doesn't change a whole lot. We still need about the same amount of money because we're
Right.
not expecting to live any less, right?
Right.
But how much you need to get there changes drastically.
A lot.
Because Casey, think about this. If I told you that in order to make your retirement goals, you needed to save an extra $600 a month out of what you're doing right now, do you think that would be kind of easy or kind of hard?
I mean, not too bad.
Not too bad, but like not super easy, right?
Right. Yep.
Okay, here's another question. If I said, "Hey, Casey, I can show you a way to make an extra 600 to $1,000 a month instead of trying to save it out of what you're currently doing," do you think that'd be easier or harder than just plain old saving it?
Easier. So much.
Way easier, right?
So much.
It's
Yes.
it is way easier to save an extra 10 grand a year if you're making an extra 10 grand a year
Exactly.
than it is to try to carve it out of something you're already like barely scraping with sometimes. Am I right?
Exactly. Yep.
Well, hey, listen, anybody can do this, right? I knew nothing about the business when I started, but now I do okay, right? So if
Okay.
that's something you want to look at, we can definitely talk about that. Plant a seed, guys. That's called recruiting across the kitchen table. Okay. So real quick, Casey, the other thing that we talk about, because remember we had assets and liabilities, we protect our we protect against our liabilities with life insurance right now. And
Yes.
so we teach clients that you probably need somewhere in the neighborhood of 8 to 12x, right? Life insurance in terms of what you're making on your income.
Yeah.
So annual income. So right now, if we went low, 8 times yours is, just south of 400,000. Kyle is sitting somewhere around 288. I like kind of round numbers. So in reality, I'd probably say you should be somewhere near 500,000. And in reality, Kyle probably should too, right?
Yep.
So I don't like the way this system does the quotes for this. So I'm going to jump out of this really fast and use a better tool to walk you through sort of a quote. Because have you guys outside of your State Farm stuff, have you guys ever looked at anything private before?
Nope. We just had State Farm because that's where we had our, home and auto insurance through.
Okay.
And so it was just kind of one of those bundle deals that you can get, some life insurance for a pretty good deal with them.
Yeah. I mean, the bundle is not terrible, right?
Right.
But I mean, Casey, like I said before, if I could maybe show you more coverage and save you some money, is that something you'd be open to taking a look at?
Absolutely.
Okay, well, perfect. One thing I kind of want to talk about really quick. I mean, you're way more advanced than most clients. Like never be afraid to compliment your client, right? And so you probably have an idea. Most people that I talk to, Casey, have no idea in terms of private life insurance and something that they own outside of work. They always think it's going to be way too expensive, right? And
Yeah.
so, like for you guys, like if I was going to give you guys each a 500,000 and I was going to cover all 4 of the kids with 25,000 each, like how much do you think that would probably cost you a month?
Oh gosh, probably at least like $150 a month.
Okay, so like at least, right?
Yeah, at least.
Okay, so if I could get you somewhere in the neighborhood of that with all the kids covered and everything's taken care of, is that more or less coverage than you currently have with State Farm?
That's more coverage than what we have right now with State Farm.
Okay. Do you know roughly what you're paying for State Farm?
Um, I have about um 150,000 with State Farm, and I'm paying, I believe it was like $40 a month.
Okay.
And then each of the kids have $25,000 universal policy. And it is the boys all three of the boys are, because they're boys, they are $22 each. And my daughter is $21 for 25,000.
Okay, so hold on. I'm gonna do some really quick math over here. And so all four of the kids are covered for 25K each, right? But you're paying 86, you're paying 87 a month just for the kiddos?
Yes.
Okay. What about Kyle? What's Kyle paying?
He only has his work life insurance.
He only has coverage through work.
Yes.
Okay, is he gonna work there forever?
No, definitely not. He said, God,
So,
no.
I mean, so have you guys thought about like what happens to your guys' coverage and benefits and those sorts of things if you leave employment?
Yeah, honestly, we just hadn't gotten around to even adding him onto State Farm. I've always, like I said, I was 19. I've always had my own life insurance. So it wasn't that we, weren't going to get something. We just never got around to actually getting a policy. And with as much as we're paying for each of the kids, it just was just another thing that we
Yeah.
really didn't want to spend more money on.
No, I totally get that. So pause, right? So she's paying $127 a month right now for 150,000 on her and 25,000 total on the kids each, right? And Kyle's not covered at all. What we're going to talk about now is the shoebox, right? Because I want to know in her mind, like where her budget's at, and I want to come in under that because I want to come in. Well, we already know like there's 127 there because we're gonna crush those State Farm policies, right? So that's already a given. And so what I'm asking and what I'm going to be looking for is what's there on top of that. Because remember, we want to buy term and invest. If you just sell a term policy to a client and don't help them invest, well, guys, at the end of those 30, 35 years, there are no assets to speak of. That's why it's our job to do the whole job for the client. Okay. So listen to the shoebox analogy because I'm going to help her understand learning to pay herself first. And it's a very important thing that we have to understand. Right. So, I mean, Casey, I just did some really quick math, right? That's 127 bucks for just you and the kids and only 150,000 in coverage on you. I
Yeah.
mean, we just looked at it. We know we need at least close to 400 grand on the low end, right?
Yeah. Yep.
Because if we lost you tomorrow, that 150 grand after funerals and stuff, I mean, that's going to help Kyle for maybe a year and a half.
Yeah.
It's
It's
not.
not going to pay. It's not going to pay what I want paid off for
No, it's
everyone. Yep.
because I mean, we know life insurance isn't for us. It's for, God forbid, the people we leave behind, right?
Yep.
So Casey, like we like to help clients kind of think about uh, learning to pay themselves first, and we use what's called a shoebox. Because you remember when you were a kid, did you have like a piggy bank? You kind of
Yeah.
stash money in there,
Yep.
right? Everybody does. When you were a kid, you knew you had to pay yourself first. You put money in that piggy bank.
Mm-hmm.
For some reason, we get older, we forget that, right?
Yes. So
Because
true.
Casey, do you get a bill every month, like in the mail, and it says, "Hey, Casey and Kyle Morris, $600."
Oh, I wish. No, no,
Think about it though.
not at
If you
all.
got that bill, I mean, you seem like a pretty responsible person, Casey. If you got that bill, would you pay it?
Yeah.
It's a bill, right? You're gonna figure it out.
Yep.
Why aren't you sending yourself that bill yet? I
I don't know.
mean, so and I throw that number out there because that's a couple extra hundred a month that we're going to start putting into a Roth IRA, tax-free retirement. That's
Yep.
extra money. It's going to go into save money, put something aside, and then we're also going to put money in there for the life insurance, but you're already paying that, so that's kind of a no-brainer, right?
Right. Right. Yep.
So Casey, how often do you and Kyle get paid right now? Is it once a month, every 2 weeks, bi-weekly? What do you got?
Roughly biweekly is
Okay.
sure.
So
Yes.
roughly every 2 weeks. Now, I want you to think about paying yourself first, right? Like if you actually cashed your check and like put the money down and said, okay, I'm going to pay myself first. How much do you think you could shove into our like magic shoebox if it was going to put money in there for your life insurance, for your IRAs, maybe open you like a way better savings account? It's called a money market account,
Mhm.
right? Some clients are, 50, 100 a check on the low end. Some are a couple hundred a check. Some are a couple thousand, right? Like I have clients that range all over the place. And so that last one's probably a little too high for you guys, but
Right.
where do you think you guys would land?
We could probably on the high end right now, probably about $100 a week.
100 a week. Okay, so 400 a month.
Yep.
So if using the money that you guys are already using on your life insurance, if we can give you way better product, way more coverage, and also show you how we're going to invest that for you and save you some more money, is that something you'd be open to taking a look at?
Yeah, absolutely.
Awesome. I think you're going to be kind of blown away, especially when we look at the coverage for the kids, right? So Casey, I kind of pre-built this quote for us, right? So this
Yeah.
is a 35-year term, meaning the price today is the price at the end, it's level. Okay, because
Okay.
that's the only kind of coverage that we offer. I don't know how long your term was with State Farm, but they generally don't do 35-year terms like we do. And when you get to the end of the term, you don't have renewal options. Your
Okay.
only option at that point is to convert it to a whole life policy. Okay.
Okay.
So 35 years at a half million, and we'll turn on waiver premium just to have something to talk about here, right? For you, half million, 35 years, Kyle, 35 years, half million, and we're going to cover all four of the kids for 25,000 each, but the total cost, Casey, is $14. Not
Mm.
$14 per kid, just $14. Our child rider is one of the most amazing things out there. So like before we even like have a conversation too much, if I could help you cover yourself, your husband, and all four of your kids, we're going to 3x your coverage. We're going to give Kyle a half million that he doesn't have currently. And
Right.
the only difference between what you're paying now and this is like $40 a month.
Yeah.
That's kind of a no-brainer.
That's crazy.
So here's the other thing we like to do. Look, so that's 168. We said we're somewhere around 400, right?
Yep.
So you even said it earlier, my good buddy Ramsey. So this is my Ramsey compound interest calculator. So Casey, you're 31. If we open you a Roth IRA, not 687 years, good Lord, right? We're going to open you a Roth IRA with the difference of your shoebox right now. So like an extra, we won't even use all of it. We'll just say 200, an extra 200 a month that we're going to put away into that Roth IRA. So it's your tax-free retirement. Just that one account is going to be an extra 650 grand, but that's tax-free money,
Wow.
right? And so think about this, Casey. If you get to the end of this life insurance policy and we've been investing the entire time and there's an extra 650,000 in one account, I mean, at that point, do you even think you would need the life insurance?
There's more in my investment account than there is in my life insurance.
Yeah,
But not.
maybe, right? Maybe not. But the great thing is, if you want it still at the end, you can have it. Because one of the best things about our coverage, Casey, is that you can never be declined in the future for any reason medically, as
Right.
long as you've kept your life insurance policy in force. So here's crazy thing. 35 years from now, at 66, like we would agree you will be older than you are today, right? And do you think 35 years from now, Casey, when you're 66, you're going to be healthier or at least or even as healthy as you are right now?
Probably not. I wish, but probably not.
Yeah, we're just not designed to age that way. We don't get healthier as we get older.
Right.
And you're pretty savvy, but do you know the two main things that life insurance is priced off of?
Probably my health and my age, since you just asked about it.
Age and health, right? Those are the two biggest ones. I mean, obviously sex plays a factor as well, like male, female. So men are more expensive to cover than women because we're not very bright and we make terrible decisions. So we don't live as long, right? So we're more expensive. And then nicotine. Nicotine's a huge factor as well, but you guys are, nicotine free. So I'm not worried about that. So really kind of what I want to show you is I want to show you how this process works. Is that okay?
Yes.
Awesome. Because it's just an application, right?
Okay.
And Casey, you've applied for things in the past, am I right?
Yeah.
Yeah.
Yep.
Like job, school, something like that.
Yep.
When you applied, did they have to accept you?
No, they did not.
No, right? It's just an application. And even if they did accept you, did you have to take it, right? Like, did you have to take that job? Did you have to go to that school?
No, absolutely not.
No, because it's just an application, right?
Yep.
And so this is no different. And Casey, one of the coolest things about this too is that when we apply, all of our clients end up, depending on how long underwriting takes, you could end up with 30 to 90 days of conditional coverage, if I can spell it, conditional coverage for just that first draft, right? So basically, as soon as your coverage starts, you have coverage, right? You're covered, Kyle's covered, the kids are covered, right? So you and Kyle are both covered for 500K. Both of the kids, or excuse me, all four of the kids are covered for 25,000 each. And what I mean by conditional coverage is like, let's just say Kyle's going to work, right? Accidents happen. Your guys' roads up in Michigan are awful, right? Something happens, they're sending you a check for 500 grand. They're just keeping Kyle's portion of that 168. Not
Okay.
even done with medical, right? Like that's just the way it's going to work. So
Wow.
Casey, this is an application, right? So don't make fun of my handwriting, but that's an A.
You're good.
It's August, right? We're going to go into September, most likely, and potentially even all the way out into October. So what is it? The 8th. So we're about right there. We're going to submit the application. We're going to schedule you a medical exam. It's super simple, right? Height, weight, blood, urine, pee in a cup, takes like 15 minutes. Doesn't cost you anything, right?
Okay.
We'll get your medical exam somewhere out here. We'll get results somewhere over here, right? Most likely takes about 2 weeks from each stage. So let's just say your policy issues, somewhere over here. The cool
Okay.
thing, this 168's been sitting in escrow. So it's just hanging out. Like Casey, you guys are familiar with escrow, right?
Yes. Yep.
Cool. So it's just hanging out. It's there. So that 168 is actually going to come out. It's going to pay your policy when it issues, right? And then it's going to pay it into the next billing cycle, most likely, depending on when it issues and when that is. So
Okay.
what's really cool is depending on how the timing works, you probably won't see another payment come out until sometime in October. But you're going to be covered the entire time for that first payment. Does that make sense?
Yes, it does.
Very
Wow.
cool. So
Wow.
what could happen, right? I mean, I doubt it will, but they could decline you, right? They could say, hey, Noah, you're an idiot. We don't take money from Michigan anymore. Send it back. And I'm like, okay, well, I won't send it back. They'll send it back and they're going to send it in a letter that says, hey, sorry, we couldn't make you a client. And here's your money. Our bad, right?
Okay.
Actually, your bad if they decline you because it's something in your background, but
Okay.
most likely you will not be declined. So that's going to be okay. But here you could decline it. And you could say, hey, Noah, guess what? My rich Uncle Bob died, and now I'm a billionaire. I don't need your stupid life insurance, but I want you to help me invest the money. Fair?
Sounds fair. Yes.
Okay. Because in that case, you would say, hey, I'm a billionaire. I'm self-insured. I don't need it. We can argue about that kind of both ways. But same thing. If you call me and say, hey, I don't want it anymore. I won the lottery. Send it back. Okay. Well, I click a button. You get a letter in the mail, different letter, but same money. Fair?
Okay. Yes.
Okay. So when your policy actually issues, we're going to get back together. We're going to go over everything. I'm going to show you that you and Kyle each have 500,000. All four of the kids are covered for 25,000 each. Something we haven't even really talked about that's pretty cool is the terminal illness benefit and increasing benefit rider. Okay. So
Okay.
have you ever heard of like a cancer policy or anything like that in other life insurance policies?
Yeah. Cancer benefits. Yes.
Okay, so we have something very similar. It's called terminal illness benefit. So what happens, Casey, is like, God forbid you're given a terminal diagnosis, like you have 6 months or less to live. With our policies, you can actually access 70% of your policy in cash, upfront, tax-free, because we
Wow.
put the waiver of premium on. So, Casey, do you have $350,000 that you could tap into right now if you woke up tomorrow and had a terminal diagnosis?
Nope, I do not.
Well, now you do.
Wow.
Because I mean, if you woke up and you were super sick and it's not looking good, right? Your medical bills are probably going up. Your income is probably down, right? In this case, you could have access to that money within probably 10 days as long as we've got all the documentation from a doctor.
Okay.
And you're just advancing yourself a portion of your death benefit, right? So instead, if you take all 350, great. Go get experimental medical treatment. Go on a cruise around the world. Go do whatever you want, right? Because it's your money. You do what you want with it. And you just took your death benefit check from 500,000 down to 150 if you take all 350. So
Okay.
pretty cool. The kids are all covered. They have guaranteed insurability in the future as well for 5 times their current coverage, right? And it caps at 125. So that's why we put kids on for 25,000. Because I mean, nothing's ever going to happen to our kids. Casey,
No,
but how many times have you seen GoFundMe's for, little Johnny or his like cancer research or whatever, right?
too many times.
Too many times. And it's always a tragedy to me because I know had I gotten in front of that client, I could have helped cover all of their kids for like 14 bucks. I
Yep.
mean, you can't go to like Taco Bell for 14 bucks anymore.
No.
It's terrible. And so if you can cover all of them for 14, awesome. One kid, 10 kids, doesn't matter. Grandkids, stepkids, nieces and nephews, if they live with you, we can put them all on there. It's amazing, right? All right, last thing we haven't talked about yet is increasing benefit rider because we sort of alluded to it earlier, right? Like 10 years from now, is a 500,000 going to be the same 500,000?
No, not at this rate.
Not at this rate, right? And so if we could guarantee you a little bit of extra coverage every year that you're automatically approved for, you don't have to do anything for it. You're just going to get a little bit of extra coverage. And for that little bit of extra coverage, your price will go up a tiny bit, but you don't have to qualify for it. And it's guaranteed. You just decide if you want it after the first year. What actually happens is 10 years from now, Casey, you're actually going to have an extra 500,000 in coverage that you didn't have to qualify for. And it's going to be cheaper than your first 500,000, even though you're going to be 10 years older.
Wow.
And you could be sick, but you can't be declined for it.
Wow.
So inflation protection is essentially what we call that. That's increasing benefit rider. So we'll talk about that more when your policy issues because it's way easier with the table to look at it. But very, very cool feature of our coverage. Okay.
Okay.
Now, look, I know this looks like a really bad football play, right? Set hike kind of thing. But do you have any questions on any of this at all?
No.
Okay,
Nope.
very cool. So have you done DocuSign before?
Yes.
Perfect. We do everything over DocuSign. It's super simple. We're just going to apply, see how it comes back, and we'll go from there, right? We'll get your medical exam scheduled. I'll link you up with my office manager. She's so sweet. She'll take care of you on the backside for everything. If you need something, you can always call me, call Angela, whatever you need. We'll get this going for you, okay?
Okay. That
Okay, so
sounds good.
who do you want your beneficiary to be?
I guess my husband. He
I mean,
can.
I guess, right?
Yep. Mine as well.
Might as well. All right. Like scene. Even with training and starting late, that's 40 minutes. With no training, right? And no like pausing and talking about things, we would have done that in roughly 30, legitimately. And that's why, like, when we say, look, I need 20 or 30 minutes on a Zoom call, and if you can use it, great. And if not, great. Because it's true. Okay. So I'm going to stop the recording.